Hey everyone, welcome back. Hope you guys are having a great Tuesday. So we're gonna go over a couple of things here, really two things. One is the electric vehicles, EVs, that I've been kind of doing a deep dive on, trying to get all the data as much as I can. So I went through obviously Tesla and Rivian right now. I still have to finish up Polestar, but we'll take a look at some of the data that I do have on them. I'm gonna ask you guys for some help as far as what you guys want to see in that data. And then we're also gonna take a look at as far as which Bitcoin miners are currently undervalued or overvalued based on the current stock price and where they are right now. Okay, so it should be a pretty quick video. And we'll take a look at Bitcoin, obviously, at the end, see what's going on there. It's been having a pretty good rally here in the last couple of days. So we'll take a look at all that. But as always, you guys know the drill here, not financial advice for entertainment only. Please do your own research and invest in following coins and companies for full disclosure. As always, if you guys enjoy this type of content, hit the like button, subscribe, helps me out tremendously. And let's take a look at the EVs really quick here. I promised you guys that I would have this done a lot sooner than I have. I'm still have a ways to go here, but here's what we do have. So I pulled in all the Tesla data going all the way back to 2011. So we got basically 12 years of data on them as far as their quarterly results and everything else, which was going to be great for comparing the other miners, other EVs like Rivian, Polestar, and some of the other ones as well that we're going to include here eventually. But this kind of gives us, as Tesla is really the one that started it all, it's going to be kind of cool to compare them as far as where Tesla started out at as far as production is and revenue and all that when they first went public, and against Rivian, Polestar, and some of the other ones as well. So we have at least some metrics to compare against. How well did Tesla perform and how well are these guys performing as well, starting out being publicly traded companies, right? So like I said, I pulled in all the data here for Q2 from 2011 when they first became public, all the way back to, well, obviously the latest quarter that we do have here for them, which is Q2 of 2023. And I have every single thing plugged in here. So there was a lot of data that I had to scrub, get data for, plug it all in. We do have some metrics for them as well that we're going to go over with not only Tesla, but Rivian, Polestar, and the other ones as well. That's going to be coming down the pike here in I'm guessing maybe in the next couple of weeks. As I still have to do some research on Polestar, get some data on them. Maybe we'll add another EV as well into this. But we do have obviously average number of vehicles produced per day, so we can see that. Average number of vehicles delivered per day. The difference between the two, the cost of revenue per vehicle delivered, average gross profit per vehicle, average gross profit percentage per vehicle. And we can also take a look at general and administrative percentage of revenue, debt to equity, current ratio, things like that. Let me know what else you guys want to see in here. And when we actually look at some of the charts here, you can see that we're basically looking at vehicles delivered each quarter, vehicles produced each quarter, average number of vehicles produced per day, average of vehicles delivered per day as well. Quarter over quarter vehicles delivered percentage changes, see how they're improving or going down on it, see which quarters are down for them. Same thing for produced and delivered. Like I said, revenue per vehicle delivered. What is the average revenue basically based on what they provide being mined? I may also dig a little bit deeper into this and go by the model if I can, to be a little bit more tricky on that, because they don't split the revenue side of things based on that. They just provide all the revenue. And then cost of revenue per vehicle produced as well. Then we look at debt to equity, current ratio. Those are the normal things that we look at, total current assets, total current liabilities. And then we'll do some basic math on this. I'm still trying to figure out how to properly value them based on the last 3 quarters, current quarter that they're in. The current quarter that they're in, we don't really know the numbers. We can kind of estimate based on the production rates and things like that. Are those increasing? What could those increase in the current quarter? We could possibly look at it that way as well. So we do have a lot of data on those guys. And like I said, let me know in the comments down below what you guys would like to see on them going forward as well, other than what I already have in here, right? So like I said, I still need to figure out a good way to value them properly like I have done with the miners here. But it's a pretty good start here nonetheless, okay? So that's it for that. Just wanted to give you guys a quick update on that. And let's take a look at the miners here, see what's going on with them, which ones are currently undervalued, overvalued, based on the current numbers that we do have here. So the numbers here that we do have are the latest for today, which is where the stock market closed and the miners, where the stock prices were at that point. On that, we will discuss a little bit of each one, and it's going to be a deep dive. We're just going to go through this relatively quickly, just a minute or two on each one, and go through this relatively quickly, okay? So obviously, first one up, too bad, is Argo right now. Argo is $1.08. Market cap is at 57.8 million. You can take a look at their performance here over the last 12 weeks. Their current hash rate, future hash rate, you guys can take a look at that. We've covered all of this before when they did the August production updates, and so we're not going to really dive too deep into it. Right now, Based on the last 3 quarters and the current quarter that we're in, I'm guessing with a P of 5, because I give them a P of 5 because they're not growing that much right now. They're growing, well, they're pretty much flat. They're going to be maybe increasing another 100 to 200 petahash, if that, coming up here. So not a lot of growth for them. So that's why I have a P of 5 right now, right? Based on the information, I'm looking at them to be between $2.08 and $3.13. They're currently at $1.08. Obviously, a lot of miners are beaten down a little bit here in the last 9 weeks. I would think fairly between somewhere around there, they should be priced. And then if we look at the current revenue that they had for August, multiply that times the 7 months before the halving event, and then 50% after that for the 5 months. After the halving event, we have them at $1.30 to $1.95. They're right now at $1.08. So I think they're pretty close to being fairly valued based on a historical data. They're undervalued. But as we get closer to what they're actually going to be mining, because the network hash rate is going to be going down, or not going down, it's going to be increasing, meaning that the revenue is going to be going down because they're going to be mining less, unless Bitcoin actually goes up in value, in which case, then they could possibly be undervalued at that point, okay? But with them being such a small, well, not really a small miner, but not a lot of growth left in them, it's understandable to see why they are undervalued right now as it is, right? A lot of investors are looking for miners that are growing into the halving event, going to be possibly debt-free, things like that will help them survive going into the halving event and after the halving event as well, okay? So that's it for Argo here. Let's take a look at BitDeer here. BitDeer currently is at $13.58, market cap of 1.5 billion. Their future hash rate is supposed to be about 20.2 exahash. Current hash rate, I think future hash rate includes hosting as well, which I believe I included in that as well. Current hash rate is at 7.2. They've had pretty good growth here in the last couple months, especially last month in August. You can see their performance in the last 12 weeks, which hasn't been too bad. We've talked about obviously all of this. Looking at their actual numbers here, I think they should be valued fairly between $13.47 to $20.21. They're currently at $13.58, so they're pretty fairly valued based on that. Now, if we include the revenue going forward, 7 months before the halving event, 5 months after, we're looking at $20.07 to $30.10 with a P of 15 for all of these. I think they're undervalued right now, right? And it just all really depends on where Bitcoin goes. Also, if Bitcoin continues to go up like it has here recently a little bit, we're still not back to where we were in the 30,000s, but we're at least at 27,000 right now. So things have looked up a little bit better here in the last couple of days. But based on all this, we can see that their cost to mine Bitcoin has obviously gone up here in Q2. And what else do we have here? Debt to equity, would like to see that being lower. Current ratio is still fine. So they're obviously pretty healthy balance sheet as it is. Not a big deal there. We'll just have to see how they continue to grow their own hash rate. They do have a fairly large hosting and what else do they call it? They call it something different. It's they have hosting, and then they also have where you can basically mine with purchase lease the miners that they do have to mine for yourself on that as well. Okay, so this is kind of the way BitDeer right now looks like. Next is BitDigital. BitDigital right now is at $2.36, market cap at 200 million. Their performance over the last 12 weeks has been pretty bad here. You can see obviously a lot of red here, with just only 1 week in the green. We've talked about obviously all of this here. Their current hash rate is at 2 exahash. Their future hash rate is about 2.1. Not a lot of growth left in them. And they're supposed to be getting some more miners in. Based on all of this, we've covered everything here in the past over the quarterly results and monthly results as well. They are at 236 right now. I have them at P of 10 because they don't have a lot of growth left. I could possibly bring them down even to a P of 5. That gives us to $2.15 to $3.23, meaning that they're fairly valued right now. If we take the current, well, not the current, the previous month revenue of August, multiply that times 7, and then the 5 at 50%, we get $2.18 to $3.27. I do think that they are fairly valued right now, right? The only thing that would change that, obviously, is Bitcoin price going up and their hash rate going up as well if they decide to buy more miners as well, okay? So that's kind of it for BitDigital, how that one stacks up. Bitfarms is next. Bitfarms right now is at $1.13. Their current market cap is at 291 million. Their current hash rate is at 5.6. Their future hash rate, which they have already purchased, is at 7.8. They said I think they want to get to, if I'm not mistaken, 9 exahash possibly by the end or before the halving event. We'll see if they can get to that. And then you can see their performance here over the last 12 weeks hasn't been great. It's basically been beaten down here a little bit, or quite a bit here actually. It's down 20%, 34%. on the week, 12 weeks and 8 weeks. So then we've covered obviously all of this here on the August update. This on the quarterly updates. We're not going to get into it here. I currently have them because they are still going to be growing quite nicely here from where are they at right now? 5.6 to possibly 7 to 9, something like that. I have them at a PE of 20 because of the growth. I would think they would be between $4.78 to $7.17. They're currently $1.13. I think they're way undervalued right now. Even if we look at the August numbers for them as far as revenue is concerned, multiply that times 7 months before the halving event and then the 5 months after the halving event, we're looking at $3.92 to $5.89. So still way undervalued in my opinion, okay? On that one, let me know what you guys think of that one. We can see that their current debt to equity ratio has been coming down, which is good. Current ratio has been going up, which is also good. So they're going to be in a pretty good shape when they get into the halving event. I believe they want to be debt free, which would be nice to see. And they have debt here of 37 million. That's still quite a bit to pay off, but they have obviously come way down here from the like 100 plus million that they had at the middle of last year. So definitely paying that down, which is nice to see. Their total current assets have also been increasing, which is nice to see. Okay. So that's Bitfarms there. Let's take a look at Cipher here. Cipher right now is at $2.75, market cap at 700 million. Excuse me. And they have pretty close to the same as Bitfarms. So Bitfarms is at 5.6. Cipher is at 5.8. Yet they got 700 million market cap here, and Bitfarms has 291, right? So that's why I'm saying Bitfarms is quite beaten down and way undervalued. Okay. Future hash rate about 7.3 is what's being reported right now. Their 12 weeks performance here you can see has been also pretty bad, pretty close to what it's been for Bitfarms as well. Okay, we've talked about this here in the past as well, looking at their numbers here for the last 3 quarters, current quarter that we're in, the P of 20, because they do have still a little bit of growth left in them, well, quite a bit of growth, about another 1.5 exahash or so. That is, I think, substantial here. So I give them a P of 20. So we're looking at $3.35 to $5.02 based on the previous data going forward, looking at the next 7 months and then the 5 months after the halving event. If things stay the same, obviously, we're looking at $3.71 to $5.56. Still undervalued in my opinion on that one, okay? Their total current assets look good. Total liabilities are also good. And their current ratio is good at 1, so they at least can pay off their debt here. Debt to equity is also pretty low, so that's not a problem there as well, okay? Next is going to be CleanSpark. CleanSpark right now is at $4.37. I did buy CleanSpark today, another 500 shares. So I have 9,000 shares of them right now. My goal is to get to 10,000 shares before the halving event. I think I'll definitely going to be able to reach that probably maybe even by the end of this year. And then my next goal is to possibly get into Iris Energy, but I got to see how they perform, how they dilute their shares, when they're going to dilute their shares, how they're going to grow. I need to see a little bit more information on that before I pull the trigger on that one. Okay, so market cap is at 667 million. And you can see here that Cipher is actually valued higher at 700 million compared to CleanSpark, which is at 667 million. And that is, even though they have 9.3 exahash, they're going to be going to about 16 exahash. I'm at 17.58 based on everything that they provided us with being bought already. But they did state that they're going to be getting rid of some of the older miners, which would bring them down to about the 16 exahash as it is. Okay, we've talked about everything else here. You can see their performance here over the last 12 weeks also hasn't been good at all. We got, well, basically 2 in the red and 2 in the green, but they're just really low here. Okay, looking at the numbers here as far as the last 3 quarters, current quarter that we're in, I have them at PE of 20 because they do have a lot of growth left in them. My thought is they should be around $11 and $16.51, somewhere between there. Even if we look forward into the next 7 months and 5 months after the halving event, based on August numbers, I have them at $11.42 to $17.14. So they are way undervalued based on where they are right now. Other good thing here to take a look at is debt to equity has been coming down, which is great to see. Current HODL has been current ratio has been increasing as well, which is good. Total current assets have been increasing. Total current liabilities has been decreasing also, which is good to see. And then their HODL stack has also been increasing here, being in the 4th place, I think, right now, behind Hive as far as how much they HODL right now. So definitely way undervalued in my opinion. Next is going to be Core Scientific. Core Scientific is obviously in a strange position right now because they are going through bankruptcy, Chapter 11, which they're going to try to get out of by the end of October. But they are at 70 cents right now, market cap at 262 million. And we just don't know how much they're going to dilute shares that are currently out there, if they're going to issue new shares to pay off the debts that they do have. We just don't know. They're currently at 15.2 exahash right now. And you can see their performance here over the last 12 weeks has been pretty bad. as well. And then going down here to the numbers, I have in between a P of 10 of $4.69 and $7.04. Now, if they dilute, I don't know how much they're going to dilute. Let's just say they dilute 50%. Well, then at that point, you're going to be at $2 and something cents to $3 and something cents at that point, right? They're at 70 cents right now. I do think they are undervalued. Even if we look forward into the next 12 months, 7 months with full numbers for August, if we multiply that, and then the 5 months after the halving event, looking at $3.40 to $5.10. And if they dilute 50%, again, I don't know exactly what the number is going to be. We're looking at, what is it going to be, $1.70 to $2.55, something like that. Okay, so still way undervalued for where they are on that one. You can see that their total current assets has been coming down here as they've been paying off debt. Total current liabilities has also been coming down, but they still have a lot of liabilities that they need to work on that are not in the current pile, but in the overall pile. There's, I think, what is it, over 700 million or something like that they need to pay off and work with creditors and things like that. So that's why they are getting a discount on their price right now. It's because of the bankruptcy. Sorry, I need to take a sip of water because my throat's starting to get dry. But let me know what you guys think of this one, okay? Next is going to be DigiHost here. And DigiHost is at $1.07 right now, market cap at 30 million. Their performance over the last 12 weeks has also been pretty bad. They're down 42% from 12 weeks, 46 from 8 weeks ago. And their future hash rate is going to be about 1.1 exahash. They're currently at 913 petahash. And going down here, I have them at $1.72 to $2.59. Not a lot of growth left, so I have them P of 5. And based on that, I think that they are still undervalued, but because they are growing so little going into the halving event, that's why they're getting discounted here, and that's why they are at $1.07, which I understand. And if we look at the next 12 months, using August numbers for revenue, we're looking at $1.47 to $2.21, which makes me think that they are pretty close to being fairly valued, maybe a little bit undervalued, but not much, based on the discount that they are not growing that much. If you look at total current assets, those have been coming down. Total current liabilities has been coming up, so that's also a little bit of a concern there. Current ratio has been coming down as well. That's a concern, and debt to equity ratio has been coming up, which is a concern there. So that's kind of why they are where they are right now. Okay, excuse me. Okay, next one is going to be here Hive. Oh no, DMG. So DMG's at 21 cents right now, market cap at 35 million right now. Their performance over the last 12 weeks has also been, hasn't been too bad. I mean, they're down, well, from 8 weeks they're down 34%, but overall it hasn't been too bad. They're just down a couple percentage points here each section of that part. Current hash rate is at 917 petahash. Their future hash rate is going to be 1.2 exahash, roughly. A little bit of growth left in them, but not much. I'm going to look at their numbers here. Down here, I have them between 30 cents and 45 cents. They're currently at 21 cents. I would say they're slightly undervalued, but because of the lack of really strong growth here, that's why they are where they are right now. If we look forward to the next 12 months, I have them between 18 cents and 28 cents, which would make me think that they are pretty fairly valued based on the 21 cents that they currently have right now. The good thing with them is that debt to equity is really low, which is good. Current ratio is way up there, which is also good. So they got plenty of cash. Total current assets is really high as well, and total current liabilities is really low. So they're in a pretty good position to, I think, weather the storm. It's just a matter of fact whether they grow more into the halving event and after the halving event, and how they basically do all of that. Do they do it while the Bitcoin ASIC miners are going up in price? Hopefully not. Hopefully they may just wait until we get another bear market, but they really should be growing before the halving event, before we get the big spikes in, cost per terahash and everything else going up. So the same applies to all the miners here. Okay, next is going to be Hive. Hive is at $3.18, market cap 267 million. As you can see here, also pretty bad performance here in the last 12 weeks. A lot of my miners are down from 12 weeks ago. We've seen a pretty bad run here for the miners, for Bitcoin in general, in the last 9 weeks. And this is being obviously translated here into the performance that we've seen here. They are at 3.69 exahash. They're saying that they're going to get to 6 exahash by the halving event. They currently have purchased miners to get them to 3.7 exahash. Okay, going down here, I have them at $6.95 to $10.42 with a P of 15, if they can get to the 16 or 6 exahash. But that's a big if, because we haven't seen anything from them as far as buying more miners or anything like that, and we only have 7 months to go before then. Not a lot of time frame to grow, but we'll see. Okay, If we look forward next 12 months based on August numbers, we're looking at $6.46 to $9.69. P of 15, like I said, they're at 318. I think they're undervalued right now. Okay. Debt to equity ratio is also really good for them. Current ratio is also really good. Total current assets is great. It's high up there at 75 million. Total current liabilities at 24 million. So definitely not a problem there as well. Okay. Next is going to be Hut 8. Hut 8 is currently at $2.09. Market cap at 463 million. They're obviously going to be merging with USBTC here, possibly by the end of the month here, if everything goes through. So we'll get some different numbers for them. But right now, I would say they're at 2.6 exahash roughly. With the merger, they're going to be getting to about 7.5 exahash. So I'm giving the benefit of the doubt of that because we know that's going to basically come through for them. And looking at the numbers here, they're currently at $2.09. I'm at basically 99 cents and $1.49. I think they're currently overvalued, but based on the fact that they're going to be merging, getting to 7.5 exahash with that, I would say they would be undervalued, but we also need to see the numbers that actually come through as far as how much stock is out there, what is the price stock at the time of merger and everything else. But I would think they would be undervalued right now. If they do a 5-for-1 split, you're looking at $10, something like that, and then we'll have to see what's going on there. And then if we look forward into the next 12 months, we're looking at 79 cents to $1.18. At that point, that would be obviously still overvalued for me. But we need to see some more numbers from when they merge, and maybe with obviously the end of the month of September is going to be the end of the quarter as well. So we'll get Q4 numbers that are going to be the combination of the companies combined. Maybe then we can do a better estimate as far as whether or not they are overvalued or undervalued. Okay. Okay. Finally, we have, well, not finally, but Iris Energy is next. They're at $4.55. Market cap at 303 million right now. You can see as well, performance here for over the last 12 weeks has been pretty bad. They're currently at 5.5 exahash. They're supposed to get to 5.7 exahash. They are saying that they're going to grow to even, I believe, 9.1 exahash is what they're trying to get to before the halving event, but they have not purchased any miners yet. So they still have some growth left if they do that. And looking at the numbers here that we currently have for them, I have them at $6.72 to $10.08. They're at 455. I think they're undervalued. Going forward into the next 12 months, based on the monthly revenue for August, they should be around $12.20 to $18.30 because the revenue has been increasing for them. Okay, and this is like I said for all these guys here. If Bitcoin stays where it's at, hash rate stays where it's at, that's kind of what we're looking at. Obviously, if Bitcoin goes up in value, hash rate goes up in value, we'll have to readjust things, but it shouldn't be too much different from where we are right now. Okay, so that's it for that one. Debt to equity looks good. Current ratio also looks good as well. Total current assets is at 89 million. Total current liabilities at 24 million. So that's looking pretty good there as well. Okay, they paid off a lot of debt over the last 6 months to get to where they are. Actually, returned miners, and then they got wiped off of their balance sheet. Next is going to be Marathon here, I believe. Yep, Marathon. We got a couple more to go through. So Marathon's at $9.56. Market cap at 1.6 billion. They're at 19 exahash right now. Future hash rate 24.6 exahash, and that's a combination possibly with, no, this is just what I have them at getting to with the miners that they provided as buying. Performance-wise, you can see here has been pretty bad over the last 12 weeks, like we're seeing across the board here with all the miners. And then when we look at the numbers here, I've been between $14.71 to $22.06, looking at the last 3 quarters, current quarter that we're in. And then when we look forward into the next 12 months, I have them at between $16.12 to $24.18. They're definitely undervalued in my opinion right now. As a lot of miners are, because Bitcoin has been coming down. Miners come down even more when that happens. But we get the opposite. When Bitcoin goes up, the miners go up even more. So that's kind of the boat that we're in right now. As far as, let's see here, debt to equity ratio, 1.28 is pretty high. Current ratio is really good here, 14.9, which is great. Total current assets got plenty. Total current liabilities is also way down. They also have just reported last week. They're going to be paying off about, I think, 400 million, some and change of the debt that's wasn't due until 2026. So that's going to be coming off the balance sheet here. So they'll have a stronger balance sheet as well. So that's good there. So like I said, I think they're overvalued, but they're going to be diluting shares to do that, which is going to be adding another 26 million or so on top of that. Okay, so that's that one. Mawson here. Mawson still has not provided the numbers for August here. It's a little concerning that we're already in September 19th and they have still not provided their numbers yet. You know, it's 19 days. You should have the numbers for the mining information for August within the first, excuse me, 2 to 3 days at most. and be able to provide this stuff and information for your investors. So anytime a miner does that, that's usually a little red flag for me that something might not be right. They might be in trouble, but we'll have to see. We'll give them a couple more days, see if they provide information on that. But they're currently at 66 cents. Market cap is at 10.9 million. The current hash rate is at 1.4 exahash. Future hash rate is supposed to be 7.8 roughly. And then you can see their performance here. They've been beaten down quite a bit here, so they actually bounced here in the last 4 weeks. You can see that they're up 56% from 4 weeks ago, 23% from a week ago. Or last week, they were up 23%. Okay, now looking at where they are currently at 66 cents, I'm at $2.35 with a P of 5. This is for the last 3 quarters and the current quarter that we're in, and then to $3.53. Based on the growth and some of the things that we see here, I'll point these things out here. I can kind of see why they are where they are right now. But going forward, the next 12 months, I have it between $3.14 to $4.71. The obvious concern here is their Q2 cost was, to mine one Bitcoin was 18.4 thousand. That's obviously pretty high there. The Bitcoin mine quarterly has been increasing, which is good to see. The debt to equity has been increasing, and their current ratio has been decreasing, which is kind of not great. The total current assets have also been coming down, and their total current liabilities has been coming up a little bit here. So that's obviously a concern there. That's why the stock is where it's at right now. Okay, it's being discounted because of the the fear of possibly not having enough cash to get through to the halving event. Okay. Next is going to be Riot here. Riot is at $10.44, market cap at 1.9 million, 1.9 billion, sorry. You can see that the performance here also in the last 12 weeks has been pretty bad. Current hash rate at 10.7 exahash, future hash rate about 20. They do have the option to get to 30 exahash, but they have not exercised the option yet to buy those miners yet. Okay, so they do obviously have a lot of growth left in them. Looking at the numbers here, I have them between $8.65 and $12.98. Looking at the last 3 quarters, current quarter, that would be at $10.44. Now, when we go into the future estimates, we're looking at the next 7 months of full revenue, basically based on August numbers, if everything stayed the same, and then the 5 months after at 50%. But because they curtailed so much in August, these numbers are probably not accurate, nowhere near accurate where they should be, because they generated about 30 some million in power credits, which they can use to make their revenue, as far as cost of revenue, be almost zero on the next couple months if they wanted to. So this is obviously very challenging for me with them doing the power credits and things like that, because I don't know how much they're going to apply the power credits each month. But if we included the 31 million into this that they basically made, they didn't really make it, but they get it in credits. That's why it's challenging. I would say that they should be probably between $14 and $21, something like that, based on that, because their cost of revenue is going to be way down here. Their profitability is going to be way up, probably closer to about 80-90%, if not 100% at a given month if they decide to do that. So that's why I think those numbers are really low here. So I think they're fairly valued right now based on the previous data that we have, but going forward, I think they're definitely undervalued going forward. Let's see here. Debt to equity ratio is way down, so that's good. Current ratio is also way up there, so that's good. Total current assets 482 million, and then current liabilities at 74 million. So obviously plenty of current assets to pay off current liabilities. Not a big issue there. Okay, next is going to be Sphere 3D. They're at $1.35 right now. Market cap is at 16 million. They're at 1.3 exahash. Future hash rate is supposed to be 1.8 exahash. Their past performance here has been actually pretty good here. They've been beaten down also because of the lack of growth that they've had. And we'll also look at some of the numbers down here. Based on all of this, I'm going to P of 5. Like I said, the last 3 quarters, current quarter that we're in, $2.84 is kind of where I see on the low end. The higher end, $4.26. They're at $1.35 right now. I think they're undervalued on that, but that is a reason for it. Their debt to equity ratio has been going up. Their current ratio has been going down. They don't have enough current assets to pay off current liabilities. You can see here that their current assets equal 4.68 million. Their current liabilities is 7.16 million. So anytime I see this, this is obviously why this stock is being discounted right now. Okay. Let me know what you guys think of that one. And obviously they need to grow more, for one, become more lean as far as costs are associated with mining, and in general, sales in general, expenses like things like that need to come way down in order for them to survive going into the halving event and basically exiting this halving event as well intact. Okay, let me know what you guys think of that one. And we got 2 more to go here. Terrawolf. Tariff was $1.60 right now. Market cap 353 million. Past performance here in the last 12 weeks has been abysmal here as well. Current hash rate 4.9. They're supposed to get to 7.9 exahash, so they still have quite a bit of growth left in them, which is good to see. And I'm at the last 3 quarters in the current quarter, based on that, at $3.27 to $4.91. They're currently at $1.60. I think they're undervalued, but they also have a debt issues as well, so we need to take that into consideration. Going forward the next 12 months, having between $3.95 to $5.92 because the revenue has been going up. As you can see here, last 4 quarters revenue has been increasing quite nicely, which is good to see. So that will definitely help them pay off some of the debt that they do have here. But here's the debt to equity ratio right now, which is at 1.22 for the latest quarter. Current ratio has come down to 0.1758. And you can see here that they have basically current assets of 14.3 million and current liabilities of 81.68 million. So there's a reason for this, why the stock is down. The fear of them possibly not having enough cash to go forward, possibly, right? They've been selling all their Bitcoin as it is every month to try to pay things down, get some things on the book, but they really need Bitcoin to go up in value so they can pay this stuff off and get better balance sheet here, okay? And then going forward, like I said, $3.95 to $5.92. So that's kind of where that one is sticking at, and that's why it's where it's at right now. It's because of the debt, unfortunately. Next is going to be Stronghold. Stronghold is kind of in the same situation. So they're at $4.72 right now. Market cap is at 35 million roughly. You can see their performance here over the last 12 weeks is mixed, but overall down here. Current hash rate 4 exahash. I don't know where they're going to get to the future hash rate. They're saying maybe 6 or something like that. They're currently have enough bought to get to 4.1 exahash roughly. Okay. Now when we look at the data here, last 3 quarters, current quarter that we're in, I'm at P of 5, which is pretty low because not a lot of growth left. $19.82 to $29.73. I don't think that's going to happen really because, well, just the operations, man. The operations just really are not that great with the costs that they have. And I'll point this out to you guys here in a minute. But they're currently at $4.72. They don't have a lot of shares out, which could obviously catapult the stock a little bit faster here. But going forward into the next 12 months, I'm at 1958 to 2937. And here's obviously the big parts that are concerning. So debt to equity ratio is at 1.15, pretty high. Current ratio, Tire's obviously better. They're at 0.598. Their total current assets is at 17.47 million, and their current liabilities is at 29.12 million. Now, that's not all of it here. If we actually roll down, we have to go down to them. And here, this is the part that's really concerning for me. The revenue came in at 13.7 million here. This was, I believe, just for the self-mining, if I'm not mistaken. Cryptocurrency mining, which is the biggest part of their operations. They got energy here, crypto hosting, as well as a little bit capacity, other things like that. But even still, just with their own self-mining, general and administrative compensation came in at $10 million, 73% basically, based on that. That is way too high. They got to cut a lot of fat, and that's why the stock is where it's at right now, because they just have a lot of fat they need to cut, unfortunately. It's bloated over there, and they're not anywhere near where they should be. They should be closer to like the 49%, even lower than that. They should be closer to like 20%. So they need to really do something about that in order for investors to really appreciate the stock and get it up there in value, in my opinion at least. Let me know if you guys disagree with that. But that's kind of the reason why as it is. Also, their cost to mine, where's their cost to mine? 1 Bitcoin minus depreciation. Okay, cost to mine 1 BTC minus depreciation came in at 30,000 for them, which is just outrageous high. And that is based on, if we take a look at calculated crypto mining expenses, that is going to be down here. This is basically me calculating the numbers here that they included: fuel, operating, maintenance, general administrative, as well as included in that. That's a lot. That's pretty high for them to be profitable to make 1 Bitcoin. Okay, so that's it for Stronghold. Let me know what you guys think of all of these. Try to go through this relatively quickly here, not to waste your guys' time as always. And then the spreadsheets are going to be available to my Patreon members as well. Then that includes the EVs as well. That's going to be uploaded tonight, possibly, along with this one here as well, updated. And then we'll see where things go. Obviously, it's been pretty quiet here in the last couple of days with miners. We've obviously gone through the quarterly results. We're still missing Mawson, like I said, for the numbers, and then we might be missing 1 or 2 with the quarterly results. But that's really all that we're waiting on right now. With that being said, I'll probably start uploading some of the videos that are just the clips of some of the August production updates, some of the quarterly results as well, just so people that have missed it before, they can kind of catch up on those as well. then we'll see what happens later on this week. All right, so that's it. I hope you guys enjoyed. If you did, hit the like button, subscribe. Helps me out tremendously. And I'll see you guys in the next one. Until then, bye.